Folks, my apologies. I completely lost track of time. I hope everybody had a happy Thanksgiving. Happy to Sunday Night Stock Charts Live, actually Sunday Night Futures Live. And what we're going to be talking about today is a little bit about gold, but more so sentiment indicators in the equity markets. Are we in a bullish phase? Are we overly optimistic? What are the charts telling us about sentiment? We know that by and large, the charts are looking strong. The path of least resistance is clearly up. But are there indicators out there that we should be looking at and saying, okay, perhaps we've gotten over our skis a little bit here, and it's time to think about raising capital. Maybe it's time to go adding to shorts. So we'll talk a little bit about that tonight because nobody on CNBC is going to talk to you about it. We talk about it here because we want to prepare everybody for what is inevitably going to come. It's got to come. It's part of a good, healthy market. That is a good, healthy correction. Does it happen this week? I don't know. I'm not that smart. Does it happen next month? I don't know. I'm not that smart. We need to be very humble, yet very, very educated and very, very aware and nimble to be able to move when the market tells us that it is time. So before I go any further, let me go to comments to make sure my audio is working right and apologize to everybody. Again, I'm sorry I'm late. Bob, it begins. Bob's putting on his stretchy pants right now. That's brutal. That's brutal. How do you know I'm wearing pants right now, as a matter of fact? How dare you be so presumptuous? Good evening, Tim. Welcome. Seymour Rivers, welcome. Thank you very much. Sean, Bob's putting on. Yeah, I'm putting on my stuff. Yeah, it is getting cold here. It is getting, as a matter of fact, I want to check natural gas. The entire lower 48 is getting hit. Hello, all. Cash we trust. Absolutely. I mean, people in the DC swamp have to be freaking out right now. Cash Patel. Oh, my God. Christopher Wray is out at FBI. Cash Patel coming in. And the rats are going to be leaving the ship ASAP and trying to cut deals. Let the squawking begin. Yodi, welcome. I did not. If you could share with us, that would be awesome. He tweeted it. They retweeted it on Truth. George, welcome. Hope you had a great Thanksgiving. Again, happy Thanksgiving to all. I love this time of year, especially since the fact that it's a seasonally favorable one. But of course, what I'm alluding to is Christmas. Hanukkah, Kwanzaa. I don't care if it's Festivus. I just like the holiday season. And of course, seasonality. So let's get to it. Let's talk a little bit about the futures action. What you're looking at here is the MDY, one of the best performing sectors of the stock market in December, by far. Interesting price action here is that Friday was a weekday. I'm really even reluctant to talk about it given the light volume. But into the close, they sold it off. So I really wouldn't mention it if they just gapped us up because it wouldn't matter. But they gapped us. Well, they did gap us up, but they haven't taken out the highs of Friday. Now, this is only a 5-minute chart. We're not day traders here. But we're going to set some alerts up. I want to know when we begin to break out. We're filling a gap right now on a 5-minute chart. And I want to know if we break to new lower lows. Now, me personally, I'm hoping for a break to new lower lows because we are short of AppLovin, mid-cap stock, and we are long of a pretty big now put spread, and we want to see it break So hopefully we get some real weakness going into tomorrow morning. We are now negative on the mid-cap names. So our alerts are set. We'll step back here if we begin to see interesting price action. Taking a look at the S&P 500, opening down fractionally. No volume whatsoever to speak of. The Russell 2000, up a couple of ticks, looking pretty good. This leads me to believe that yields are probably pressing lower. We're going to check that out in a moment. Nice little setup here. Higher low. Let's pull back on this one. Again, I'm not a day trader. I want to know if we take out these lows. New trading month, folks. So there's going to be a lot of money sloshing around, especially before the end of the year. And as the first couple of weeks roll by, you're going to see volume begin to drop off into the final couple of weeks because the big money is going to be heading off to Stad and Aspen and Vail, and they're going to put the computers on autopilot. Unless, of course, we have a event. Let's see if we take out the day's highs as well. A lot of nothing going on here right now. Really, net. No volume to speak of. Let's talk about the NQ. Down fractionally as well. Let's go to the 5-minute. Looks like they moved us lower. They're trying to drive us higher. Let's set up an alert up here. Do we take out Friday's highs? Actually, that would be here. And we'll put an alert under the after hours action on Friday as well. Did they move App Lovin' around after hours? Looks like there was some action after hours on Friday. Yeah, they moved it up. I'm glad I didn't look on Friday. What else do we have here? I did the S&Ps. I did the RUT. Let's move on to yields. The 10 years up fractionally. This is not going to influence the market right now. Volatility. Let's bring that up on the big chart. Let's do a little bit of analysis here. Volatility has just been destroyed of late, which when things get very, very bearish is when I get very, very bullish. We haven't had back-to-back up days on volatility since here, when the new contract opened up, the 20th and the 21st. For a string, or I should say for a rally, that was back here, which began on the 14th. So we're due for something. Now, when you take a look, this is a daily chart. When you take a look at the stochastics, which is a momentum indicator, we are deeply, I don't like using this word, oversold. It's used way too loose, and it doesn't mean go in and buy right now. You need to remember that when a stock or ETF or commodities, cupcakes, whatever you're trading, if they're oversold, they could stay oversold. That's just the way it goes. So being early is the same thing as being wrong. So I'm not saying to go buy volatility just yet, but what we're watching for is a breakout. We're looking for a sea change. And I'll be honest with you about something. When I take a look at this chart, what I'm noticing, I always look for higher lows. And if we begin to rally from this point here, that tells us that we need to be looking at these pivot points, the center of a W formation up here for a potential breakout. And that would have to have a high 17 handle. And that's on the December contract. The VIX index is not going to show this. It's going to look completely different. This is the front month contract, not the continuous contract. So, interesting stuff setting up here. Let's drill down deeper. Let's spend a couple of minutes here because the show is aptly titled itself to reflect. I forget what the title was, but I meant it to be for sentiment. And we want to look when we shouldn't be looking, right? We just went positive on volatility. We're going to set up an alert here. And I'm reluctant to use Friday's price action, but I will, because what we're seeing is a series of sideways price action, no new lower lows. We'll set up an early warning indicator here as well. A couple of them. I like to get overly notified. We're now flat again. I usually don't spend this much time on VIX, but it's a new month. And new months, new weeks bring change. I got to tell you, I think we're breaking out here. I wouldn't try to front run it and buy vol contracts, but I get the vibe that we are getting ready for a move up. This is a 4-hour chart now. This would mark a breakout. Let's take a look at a 30-minute. I'm sorry to spend so much time on this, but I'm curious. Yeah, they took it down hard on Friday, but there was no follow-through whatsoever. They just held it in check. Everything was held in check. Could have been simply computerized trade. I mean, right now, nobody's really working right now except for me, this nut job. So perhaps we'll see some volume pick up when Asia picks up and it breaks down. But I get the vibe that volatility is going to move up. Our alerts are set there. Let's check in with the U.S. dollar. The U.S. dollar had a very weak week last week. Puns intended. We are moving up higher here. This is a pretty significant move. You don't see a big move on the dollar on a Sunday night. Usually the dollar does nothing. I've been doing this long enough to be able to get a vibe for how instruments trade, and rarely do you get a move like this on the U.S. dollar at the open on a Sunday night. Now, that being said, you had a big move up higher in the euro last week. Yen looks very, very bullish. I do not think that this is going to be a long-lived rally on the U.S. dollar. Case in point, let's take a look at the price action on a weekly chart of, let's get rid of all these lines. The dollar. Big breakdown, not a break. I don't want to call it a breakdown. That's hyperbolic. That's not right. We reversed last week. They tried to take it up. No bueno. Sellers moved in. We're rolling over on momentum as measured by Stokes. Let's take a look at euro yen. Now, the reason why we spend time on this is because we're long of gold, we're long of silver, we're long of the gold stocks. We booked profits on half of our position a few weeks ago, but I want to buy it back at lower prices. So the dollar matters. So at current, euro, no follow through yet on last week's big move up. Really big move. But I'll tell you right now, if it proceeds up with a new weekly higher high, resistance at 106, and if it breaks out, you got to be looking at gold. You got to be looking at gold. Even if yields are moving up higher, which I don't think that they will, you need to be looking at gold. We're going to go to gold in a moment, so stick around. Yen. It broke out last week out of a downtrend channel. I suspect that what's going to happen here is that we are going to pull back to this support level here. That's going to be a retest of the weekly breakout point. And if we follow through to the upside and the euro is rallying along with the yen, dollar is in free fall at that point in time. Whenever you see euro yen rally together, the dollar is going like this, as measured by the Dixie, the DXY. Let's check in with commodities. We're going to begin with precious metals since I spoke about gold. I can't wait to go to natural gas. Gold is down. Okay, makes sense. Dollar up, gold down. Momentum moving up. All right, so weak price action here, down about a 0.5 percentage point. Let's check in with silver. Silver down over a 0.5 percentage point as well. Palladium down 0.8%, very, very volatile. I used to own it. I booked profits there. Platinum. Am I typing in the wrong symbol here? Platinum. PA, no? Let me check. PL. Duh. Platinum down a 0.5 percentage point. Let's switch over to energy. Home heating oil taking a nosedive of late, up now about a 0.5 percentage point. Oil hammered on Friday. Up at current. This to me just looks like a dead cat bounce. Up 0.44%. Natural gas. Wow. Natural gas, when we spoke last week on Sunday Night Futures Live, was up 9% at the open. We are now down 4.5% at the open here. I am bullish on natural gas. I'll be looking at this as an opportunity to add more. Not just not right now, but in the coming days, we'll be looking to add more to our natty gas position. Because when you take a look at natural gas on a weekly view, I mean, higher lows, higher highs. What more do you want? And it's deeply oversold on a monthly time frame. And energy demand with all the data centers that are opening up around the globe, huge. All right, so that's energy. Industrial metals down. Interesting. Big moves here tonight. Oh, we didn't go over the Dow. We'll go to that before we go over to the rest of the show. Sugar, silver. Let's check in with, nice little action here on corn. Okay, mid caps just broke. We'll come back to corn, but the mid caps just broke to lower lows. I'm waiting to hear volatility fire off in a moment. What did I do? I missed it. Let's see what's going on here. Look at the gap. Look at that gap. Oh, this is not looking pretty. No volume to speak of. Oh, my bad. Okay, that was not my bad. Thinkorswim is messing with me. Okay, Thinkorswim is not working. Thank you, Thinkorswim. All right, let's go back to corn. I want to go to the weekly chart here. Corn looking pretty good. It closed out the week pretty good last week, too. Let's take a pause here, say hello to folks. Paul, welcome, my friend. TZ, welcome. Yodi, oh, I did see that. Yes. Good. Corey, do me a favor. Can you put it in the forum, please? I posted the request form. If you could put it there, I'd appreciate it. I won't remember it. And there's way too many tweets going through. Jody. Hey, Jody, welcome. Hope you had a great Thanksgiving. Okay. So corn looking good. Let's stay with agriculture, soybeans. Not a good week last week. I'm not a buyer. We'll leave it off with wheat. Then we'll go to the Dow Jones, see how that opened up. ZW is wheat. That's up at current. I like corn out of all three. Let's check out live cattle. I'm waiting for my steak to come down, my New York strip. It ain't happening. It broke down a few weeks ago, too. Ain't happening. I got stopped out of the trade. Let's check out. Oh, Bitcoin. That would help. Okay, so Bitcoin is up 99.40. The coin. We hit 100,000 on Friday. I didn't see that. So that's in the rearview mirror now. We kind of knew it was going to happen. Okay, so all right, I missed that party. Still looks bullish though. This is a daily chart. Looks good. Momentum rising. Weekly view. Looks good. Overbought, but it could stay overbought. Bitcoin looking good. Let's leave it off with YM. YM opening down. Very quiet night in the equity markets. Too quiet. A little bit of drama there. I need to get a keyboard that allows me to do sounds. Like I have mystery noise come out after I say something like that. Doo-doo-doo. Okay, I digress. All right, folks, if you're not part of our community, this is going to be, I'll be working on it this week. This will no longer be free to new members. So if you're thinking about doing it, you've been putting it off, do it quickly because there will be a fee this time next week. So jump on it. Okay. I remember posting this the other day. That was jobless claims. Okay. Yeah. So please join before we charge a fee. What else do we have to talk about here? We got to talk about TrendSpider, folks. One of the sponsors of the show, their offer is expiring in less than about a day. So take advantage of it. Use the link below on YouTube. Use the link above on Twitter. All right, let's talk about the events unfolding this coming week. It's going to be a big week in terms of economic data, folks. A really, really big one. Buckle up. And this is why I think you're probably going to get a breakout on volatility. S&P 500, excuse me, God damn. S&P final U.S. manufacturing PMI will remain in a contraction. The expectation is for a sustained contraction. ISM manufacturing also coming out on Monday. They expect the same thing. Any read below 50 is a sign of contraction, not expansion. They're expecting a positive read on construction spending, job openings. Always watch this. This is a precursor to unemployment rate moving up higher. If you see a decline, normally you see a decline first in job openings. You see an increase in unemployment, an increase in overtime. So job openings decrease, overtime increases. Then what follows are job losses. So they're expecting 7.6 million job openings. Very, very important number here. It's a forward-looking indicator. ADP employment report. They came out with a strong number last month. So let's see if they get follow through or they do a revision here. I don't know if they do revisions on ADP. ISM services. We've been in a contraction. This is what's, along with government spending, it's services that have been growing the economy. Absent government spending, there's nothing there. Factory orders are expecting a negative number. No great shock because we're getting contraction in that space. Thursday, weekly report on initial jobless claims, And then on Friday, as I always like to call the Pimp Mac Daddy of all economic data, non-farm payrolls. So let's pause here a moment. I don't care really about, let's pause that. NQ, we did something here. My guess is we moved, I'm not even going to say it. Yeah, we moved where I wanted it to go. Lower. Let's check it back in really quick with volatility. Volatility now up 1/3%. I think we're going to break out here. Okay. So what we're going to be focusing on the unemployment rate on Friday is not the headline. The headline matters. What really matters the most is this. Will the administration spill the beans of lies that they have been telling this country about job creation before the new administration? They have no reason in the world right now not or to have the BLS, Bureau of Labor and Statistics, fuzzy math the numbers. And they may not even want to do it given the fact that they have a new boss coming in. So they just may clear the decks and throw the kitchen sink out on revisions for prior months. And every time they come out with a revision, it's never up. It's always down, the trend. So pay attention to this week's non-farm payrolls reports. This month's, I should say. It's very, very important. Pay attention to the revisions. And I think that there should be a lot of people out there nervous about those revisions. Polish Taco, welcome. Fed Watch Tool. Probability of an ease is pretty good. I mean, I would say it's locked in were it not for all the economic data coming out next week. If you see manufacturing go into expansion mode, well, you're going to see this number drop like a rock. If you see non-farm payrolls beat, you're going to see this number drop like a rock. So it's going to be a very, very choppy week. And again, this is why I think volatility is going to break out. Okay, so Schiller PE ratio. We are at a level where we've broken before. Back here in October of 2021, we hit a high of 38.58. At current, we are at 38.54. We're a tick away. The all-time high reached back here, and God, I remember this. What was that high? It was higher. January 2000, 42.18. I mean, folks, we're not that far away from hitting the highs of 2000 at this point. Think about it. So, going into the new trading week, I'll lay my cards on the table. Overall, the charts look good. You have certain sectors which appear as though they're going to correct because they went too far ahead of themselves. But the mother's milk of a bull market is sector rotation. And there are sectors that are out there that look as though they're ready to move up higher. When you take a look at the QEW, that's the equal weighted triple Qs, it looks like a monster. That would be a broad-based breakout. So it looks good. And that breakout on the QQQEW could imply that the S&P 500 will move up higher as well. Now, what's the inverse? The banks look a little bit toppy. The software sector looks a little bit frothy. Mid caps, a little bit frothy. Small caps, they look actually pretty good. AI, which we're going to talk about in a brief moment, looks like a little bit of topping action. We booked profits on that trade. We had like a 58% profit, something like that. No, 53% profit. And we made those profits real because we got a little bit too ahead of ourselves. So we're out, but we want to buy it back. So the Schiller PE ratio, very, very overvalued and not that far away from the 2000 highs. We got to start talking about that. Buffett indicator, we remain strongly overvalued, 208% higher than historical trend. This is a 2 standard deviation move. We are higher now than before COVID on this metric. Think about it. For Christ's sakes, on this metric, we're higher than we were back in 2000. The Buffett indicator. I will share this out. Bookmark it, folks. I just popped the link into the chat box. OpenAI, C3 AI. Now, Canadian media sues OpenAI for scraping large swaths of content. So I suspect that there will be others. If Canadian media is going to do it, you know, U.S. media is going to do it as well. To me, I look at this and I think that this is an opportunity. We're going to go to the chart in a moment. In the New York Times, versus OpenAI and Microsoft case, which is currently in discovery, the Times claims the company similarly broke the laws to train ChatGPT as well as provide search results. I can't argue with this. I use even Grok, which is the AI for Twitter, and very, very good. Very, very good. In certain instances, better than ChatGPT, in my opinion. They scrape a lot of data. A lot of times I'll do a query and all they're doing is scraping, because I always ask for sources, and they show how many websites they pinged. So it's really, in a lot of ways, a news aggregator, and the showing is AI. Is it really? I don't know. It looks like an aggregation site. So I think that these names could be in line for a pretty good smack in the back until this gets worked out. This reminds me of YouTube going back many years ago when they were getting sued by movie studios, and everybody went to court, and they had to have certain limitations on what they could share, like 30-minute clips of a movie, or else you had a copyright strike, things like that. So this is Dodge City right now. It's the wild, wild west in AI, and you have to expect this stuff. Laws need to be getting put in place, and these are the risks of investing in these companies that current. So I think this could provide a good opportunity to build a position in AI. When you take a look at the chart, we bought it back here, sold it. I think it was we got stopped out. It was last week. I put a 5% trailing stop loss order in because, I mean, just take a look at, when do you got to set a rule to get out. I mean, this thing just went parabolic, and we got taken out. So first out, best out. Now we can look to buy the retracement. That's what trading's all about. But I would like to carry a position, perhaps not as big as what I had, longer term. Now, getting back to sentiment in the market, to me, I've talked about the yield curve quite a bit over the past several months, that once we uninverted and we started getting into this range here in gray, because this is where in the past we've seen the S&P 500 begin to roll over. We have not been able to, oddly enough, I drew this arbitrarily one day because I did some analysis. Where did the S&P 500 buckle at what level? And this was the low of all the times that the S&P 500 rolled over. This is the high. Simple as that. This is the range. And we have not been able to break through this range. And I drew these lines months ago, way before we hit it back here in September. So it's strange that this is a resistance level now, but it is. So at current, on a monthly chart, we had a very bearish month last month on the yield curve. Now, does that mean that stocks go up because of that? No, because stocks had a great move last month. It could already be priced in. What I'll be looking for here is how they open this up on the month. Do they gap us up into an inside month as we proceed? I don't care about December. December has a high probability of the equity markets closing up. The first couple of weeks may be a little bit difficult. However, the final couple of weeks, the computers are in charge. They don't want any drama. They put the computers in charge. Everybody goes on vacation. That's just the way it is. I didn't make it up. That's the way it was when I got here. So the price action I'm looking for, I don't care about December. I want to see how we're probably going to set up for January. That's where my head's at right now. Now, Bitcoin, we already discussed. So this chart here does not show that we hit 100,000 last week. Let's bring on the extended hour sessions. Because it does trade, well, it doesn't show you on a daily chart. See if it shows on the 4-hour chart. No. It's not even showing me extended hours. What the hell's going on here? 30-minute? Jesus Christ, this is embarrassing. 10-minute? They're not working. Stockcharts.com, get your act together. Okay, so Bitcoin, according to Thinkorswim, hit 100,000. Just a number. All right, I wanted to talk about Square for a moment. And one of the really great features of TrendSpider is the fundamental features they've added on over the past few months. And take a look at where we're at. I mean, we've had a major pullback on, this is a monthly chart, on Block, Square. And look at this inverted head and shoulders setup. Left shoulder, head, right shoulder. And when you take a look at resistance immediately above at this fib level, when you take a look at the revenue growth, take a look at this. Revenue growth is above where it was back during the peak back in 2021. Yet the share price, I mean, we closed at what? Closed at 88.55. Big day on Friday. Oh, excuse me, this is a monthly chart. Sorry. Big month last month. The high was up here at 289. That's not an opportunity. So this is looking really interesting. I'm sure that their growth rate is not what it was. However, they're making a lot more money now, at least in terms of sales, than they were back here. So I think that this is an opportunity. Great looking chart. I'd be looking for follow through on Square. Beautiful. So we've known about this for a while. I haven't spoken about it all too much, but I saw this and I thought it was time. The delinquency rate on U.S. commercial mortgage-backed securities, CMBS, for offices surged to 10.7%, the highest in 11 years. Office CMBS delinquencies have risen even faster than during the great financial crisis. Commercial real estate crisis is getting worse. Nobody talks about this. At some point in time, the Federal Reserve could quite possibly drop the ball here, and they need to cut rates to keep these smaller banks that have a lot of this exposure liquid in business. They have to cut rates. And again, we're trying to go back to sentiment and the valuation of the equity markets. And when you take a look at this chart here, this is U.S. equities are trading at a 75-year high in relative terms versus European equities. Do we ever see anything vaguely resembling mean reversion, or is Europe just toast? I mean, when people say things are oversold or overbought, I like to use the phrase unsustainable, because oversold and overbought, as I've said earlier, those are just words that really can, for those that are not disciplined or not experienced, they see something, they read technical analysis for dummies and says short a stock when the RSI goes above 70 or goes below 20 or 30, they'll lose their shirt, they get wiped out. So I like to use the word unsustainable. That's when you're talking about a 3 standard deviation move, and we're well beyond a 3 standard deviation move on the chart. I mean, hell, this is a 1 standard deviation. That's a normal overbought condition, overbought. We've gone well beyond that. Now we're probably at a 4 standard deviation move. You know what else is at a 4 standard deviation move on a monthly chart? AppLovin. So you have a lot of individual names at current, which are very, very frothy. And they may have great fundamentals, but there is what you call something called mean reversion. Okay. They use it here because you need it. This cannot happen, because the greater this goes, the more dramatic the sell-off is going to be when it does unwind. So people are getting wiped out. They're buying U.S. stocks, shorting European stocks, and they're making a killing. But this is unsustainable. That's the pair trade right now. Now, when we take a look at sentiment and you pull up the chart of S&P bullish percent index, not too bad. All right, here's the high range here in red. Here's a low range here in green. I mean, we're reaching the upper range, but certainly no reason to go calling your broker and dumping your stocks. All right, looks as though bullishness is rising. It is not overly frothy. Or is it? So I was playing around earlier because I thought it odd. A couple of things. I was looking at, let's clean all these off. I was looking at the bull bear sentiment indicator, and I ran across something that was very, very strange. And I thought I'd apply it. I had no idea until I just put this on how this was going to look. But using the 3-line break method, and I wanted to come up with a simple explanation. And the last thing I may be mentally simple, but my ability to explain things is not. I can go off in the weeds. So 3-line break, what the hell is it? Three-line break charts only plot a new line when a price moves significantly. This is based upon price, nothing to do with volume. Significantly enough to warrant it. It has to be a magnified move. This chart ignores minor fluctuations, focusing instead on significant changes that break through the highs or lows of previous three lines. So it's kind of an average in a way, if you will, but there are triggers that allow it to fire off. It only takes into account significant moves. More to it. Trend continuation and reversion. A new bullish upline is drawn only if the closing price is higher than that of the last three lines. We got oversold, but now we went immediately to overbought. And in fact, using this chart here, using this method, we have never, ever, on this chart anyway, this is a weekly chart, we have never been this high in the past, goddamn, since 2008. Be curious, folks. Be very, very curious. Using this methodology here, you can get lured into a false sense of security. Using this methodology here, it gives you reason to pause and reconsider the size of your positions and whether or not you want to decide to make some profits real. Because what this is telling us is that there is a huge amount of bullish optimism. I found this to be very, very odd that bullishness was as low as it was. It just didn't feel right. So I went looking for different answers. And here, same thing. What we're looking at here is the bull bear sentiment index. A lot of institutions use this. Looking at this, nothing to worry about. All is right with the world, right? There's no overzealousness in the market that should cause you concern. However, when you take a look at it from a different view, we're breaking out. We haven't been this high since back here in August of 2014. Now, what did that result in? Should you have sold your stocks? Not really. We just took a pause for a few months. Actually, 1 month, 2 months, and then we moved up higher because the pressure got released on this. So no reason to go dumping stocks here. Just a couple of different views of where we're at in sentiment. Also, gold. There were some buyers last month. I was one of them. We bought the futures contracts on gold, and we did very well with it. Right off the lows. As a matter of fact, I think we were talking about it here live. I was looking for a breakout point. Actually, no, it wasn't. It was the next morning, and we hit the lower band of support, and automatically it just fired off only one contract, and we did very, very well with it. We caught pretty much this entire move on gold off the lows. Now, looking at the daily chart, the weekly chart's not looking great. The monthly chart's not looking great. The daily chart, looking okay. I wouldn't be the least bit surprised to see a move up higher here. So gold is a store of value. Now, it makes sense given the sell-off last month in gold due to the fact that A, it was technically overbought. Silver was overbought as well, but gold really overbought. That we had some profit taking. I was one of them with the gold stocks. But now with the bullishness in the equity markets, there are now people that are wanting to get back into that gold trade. Why? You don't even see volatility rising yet people are moving back into a store of value, gold. So are any of these saying, screaming, sell your stocks right now? No. It depends upon how much stock you put into that three-line break view. I wouldn't put a lot into it yet because I haven't traded off it yet, but I'm certainly going to keep it in mind if we begin to see wonky things happen in the equity market. So that is that. Let's check back in with the futures for a moment. I want to check in with volatility. Volatility now back flat. Nothing really happening here. Mid caps is what I'm really focusing on. They are now down. Okay. Let's do some chart requests. Let's see what we got. Here's Polish Taco. Rig long term, 21 minutes ago. Okay. Rig for Polish Taco. Oh, what else do we have here? Where's my post? I see Trader Rising. What the heck happened to my post? Events. Did that post not come out, guys? Oh, I put it in the wrong space. I'm sorry. I put it in, I have a tendency to do that. I put it wrong spot. Sorry, folks. Okay. So I got rig, guys. Let me see if I can send this over to. This is going to become a protected area soon, so I'll move this over to. So what's going to be happening here is that I've been sending out a lot of our alerts through the mass feed. I haven't spent a tremendous amount of time, folks. By the way, if you want to jump in there, put your symbols in. I'll wait a couple minutes. I got rigged for Polish Taco, but this is going to become a protected area for members only. And we're going to be posting more members content in there, along with the back end of the website is being worked on. We'll be getting the trade alerts out by email and text, going back to that, but they need to redo the entire, it's like a spaghetti web of code that they need to re-establish. It was causing me a lot of trouble. And we need to find a new provider for uh, our feed for equity quotes, because the one I was using was not, it was not providing the percentage gain and loss accurately. So that's all being fixed. So for now, we're going to be putting the quotes through the huge forum here with everybody that could see. But at some point in time, the trade alerts, the entry points, and when we add, those will be in the members area. And I will share the closing of those positions, though, with everybody. So we could share out my thoughts on what those stocks or indexes, whatever we're trading, are going to be doing. So let's get to it. Amgen, TGTX. Yeah, nobody got the alert. Sorry about that, folks. I've done that before. I did my happy Thanksgiving down there too. I was wondering, what everybody's so mean to me. I didn't get a like or anything. Where is it? Yeah. There we go. Happy Thanksgiving, everybody. I kept looking. Nobody gave it a like. Nobody gave me love. My what is it? Not dopamine. My what is that chemical that fires off when you see somebody like something? I got none of that this weekend. All right, we got Rig. Amgen, interesting play, Sean. TGTX, TLT. All right, we're going to cut it off there. If members have quotes they want me to go over, please enter them. I'm going to cut it off there, though, because we're past the deadline. Okay, let's do it. Hey, I got a like. Look at that. Tim. Thank you, Tim. All right. I think it's dopamine, the dopamine rush that you get. All right, let's start off with let's clean this up first. Let's get rid of fundamentals. Folks, don't forget TrendSpider, that 65% offer ends tomorrow. Link below on YouTube, link above on Twitter. And that helps support the channel as well. Rig. This is a weekly view. I was looking at Rig over a month ago now. And the reason why was that it appeared with a Bollinger Band squeeze, which remains to this day. Let's check out seasonality. Going back 32 years, December is tied for the best month out of the year. March being the other month. So the Bollinger Band squeeze, Bollinger Bands inside the Keltner channels, Bollinger Bands in red, Keltner channels in red. All right, so I just put on the auto trend lines. This is the algorithm drawn. And we need to break out above, wow, we're at $4. We have a 4 handle on Rig. Wow. I would wait for a breakout on Rig. I don't think it could hurt to buy some here, to be honest with you. I mean, we stopped going down back here in September, early September at that. So I think that there's a trade setting up on Rig, but the caveat is that you need to get oil up. Not that I want it to go up because it makes everything go more expensive, but they'll do a lot better. Rig, the energy stocks will do a lot better with rising oil and rising gas prices, natural gas prices. Now, on a monthly view, not a great month. We broke down in September. This is the second retest of a breakdown point. We got to close the month out above 472. In fact, what I would do here is this. I would keep it very, very mechanical. When you have a weak stock that remains in a downtrend and no real catalyst to make it move up higher, I would do this. I would set up a tripwire. If this, then that. If Rig closes out the month, it must close above 477 the share. I would be a buyer. And you don't need to wait until the end of the month. If it closes out the week above 477, even a day, if you're going to put it in a stop loss order, keep it a little bit loose, but because you're in a trading range, then you'd be fine. You'll be fine. Just monitor it. And if we close out the month above 477, that's probably the bottom. And we'll keep this active for a couple of months. And we're good to go. That's our alert. It's set. Set it and forget it. Don't obsess about it. Don't stare at the chart. When this fires off, then reevaluate. Amgen. Monthly bloodbath. Weekly bloodbath. Here, this is what I was talking about before. We broke down on Amgen. This is what I spoke about on Rig. We had a check back, and then we failed. We broke down further on volume, no less. The stock is clearly under distribution. RSI, nowhere near oversold. This is interesting. Daily chart, higher low, even though we broke the new lower lows. A little bit of a bullish divergence here. I don't see a good, hell, if you're going to do it here, this is what I would do. If you're going to pull the trigger, use a stop loss right below 275 spot 19. And take note, granted, it was an abbreviated day on Friday. We had some good volume. It dropped off measurably on Friday. If people saw true value here, you would have seen rising up volume on Friday as well. Just be careful. This is I don't see an investment here. I don't, not yet. It hasn't gone through the backing and filling months of it before it finally gets its legs underneath it. TGTX. TG Therapeutics, we've gone over this one a bunch of times. Let's clean this up. Closed down. We've stopped going up here. When you stop going up, you got to look for retracement. I think that we're going to pull back down to this rising upper band of support right at around, call it $30 a share. Then I would be a buyer at that price point. Daily view. Yeah. I think we're going to move lower here. So I wouldn't, if I were a trader of it, I would sell. I'd be out. I'd buy back down here. If it's an investment, then weather the storm, because the path of least resistance still remains to the upside. So that's my take. TLT. We are long of TLT. A little bit too long of TLT. It's looking really good. I think that this coming week, we're going to get a check back to 93.44. I'd be a buyer at that level. Now, I have a very large position here in bonds because I bought in the pre-market the day after the election when they were killing bonds. And we're now up on that position, and I want to exit that portion of the position and get smaller. We have a nice profit here. We want to make that real go to cash or do something else. Daily chart, really, really nice breakout here. Good stuff. I'm bullish on TLT. I think that we have a good little rally in front of us. But I think we're going to get a check back to that weekly support level. And that's it, folks. Thank you, Jody. You're welcome, Sean. Tim, you're very, very welcome. Bob, this is a great session. Glad you are, Tim. Thank you very much for that. It really makes it worthwhile. Folks, thank you for being here. It's my honor. Don't forget, like, subscribe. You know the deal. Also, TrendSpider, 65% off at current. I give it away free to our silver and gold level members. 14-day free trial offer to the contrarian trader. Links above and below. Everybody have a profitable trading week. I'll talk to you soon.